I'm sitting in a hotel bar in Midtown staring at a Bloomberg terminal with one eye open, and some AI prompt monk on X is telling civilians Claude can find 100 baggers like Goldman Sachs for free. For free. Wonderful. Why stop there? Have Claude perform heart surgery in the minibar? Have ChatGPT fly the Gulf Stream? Have Chad replace my divorce attorney with a perplexity thread and a green juice? This is not investing. This is a slot machine wearing a Patagonia vest. The pitch says Claude can find 100-bagger small cap stocks before they explode, replicate Goldman level equity research, screen catalysts, rank hidden gems, and get you in before Wall Street notices. I read the thing. It literally asks an AI to act like Goldman, Peter Lynch, Cathie Wood, Greenblatt, Howard Marks, Michael Burry, and half the hedge fund Mount Rushmore in one thread. That's not research, that's finance cosplay with a prompt box. A 100-bagger is not a prompt output. It is a statistical freak. It is a tiny company surviving dilution, competition, recessions, fraud risk, multiple compressions, management ego, product cycles, and the part where you personally panic sell at a 38% drawdown because your girlfriend wants a kitchen remodel. And these people are being told, just ask Claude. Ask Claude what? Please identify the next Costco before the market notices. My brother in leverage, the market notices things for a living. It has PhDs, satellite data, card data, expert networks, private calls, lawyers, sell-side models, buy-side analysts, and degenerates like me yelling at screens at 1:47 a.m., while my alimony is indexed to CPI. And even with all that, most professionals still underperform. But Chad here thinks a prompt with bullet points is going to democratize alpha. No, it democratizes overconfidence. That's the real product, not stock research. Confidence. A warm little dopamine blanket for people who don't know what a cash conversion cycle is, but now believe they're doing Goldman Sachs level equity research. Goldman doesn't charge because they know how to analyze the moat in a prompt. Goldman charges because they have teams, data, compliance, sector experience, channel checks, model discipline, and enough legal review to choke a polo horse. Claude can help organize questions. Fine. I use AI too. I also use a corkscrew. That doesn't mean the corkscrew is a sommelier. This thread takes legendary investors and turns them into Halloween costumes. You are Peter Lynch. No, you are not. Peter Lynch walked stores, read filings, knew industries, sized positions, survived drawdowns, and understood that buy what you know did not mean my nephew likes an app, therefore I am early stage Warren Buffett. You are Howard Marks. No, you are a chatbot with vibes and stale data, pretending second-level thinking means sounding thoughtful in bullet points. You are Michael Burry. No, you are a text generator. Burry read loan tapes until his eyes bled. You asked Claude for 5 catalysts and a price target while sitting in sweatpants. The dangerous part is not that the prompts exist. The dangerous part is the framing. 100 bagger. Before they explode. For free. Like Goldman. That's not education. That's engagement farming with a brokerage account attached. And small caps? Dear God, small caps are not cute little puppies waiting for discovery. They are raccoons in a balance sheet dumpster, illiquidity, dilution, customer concentration, promotional management, accounting weirdness, one lawsuit, and the stock trades by appointment only. You don't screen your way around that with a prompt. You verify, you read filings, you check share count, you track insider selling, you call customers, you understand revenue quality, you ask why the stock is cheap, you ask why nobody owns it, you ask whether the CEO is a visionary or just a man with a LinkedIn photo and a convertible note. The prompt says, find companies with 10 100x potential. I can find those too. Every company has 100x potential if you ignore probability, dilution, time, execution, competition, valuation, and reality. My 4th marriage had 100x potential. It still ended with a court order and a wine fridge dispute. Here's the honest version of the prompt. You are an unpaid intern with no liability. Generate 5 plausible sounding tickers that may or may not be real opportunities. opportunities. Use enough professional language to make a retail investor feel sophisticated. Add a disclaimer at the end so everyone can pretend this wasn't financial seduction. That's the product. And the author is an AI guy, not a portfolio manager. That matters. I don't go into oncology and post 12 Claude prompts to find cancer cures before Johns Hopkins notices. Why? Because I have shame. Not much, but enough. Markets punish fake certainty, slowly at first, then on margin. The worst thing you can give a novice investor is a professional-looking report with no professional accountability, because now they don't feel like they're gambling, they feel like they did research. They didn't. They outsource the appearance of research to a machine trained to sound helpful. Chad just told me I'm being too harsh. Chad also once said his quant model liked a stock because Reddit sentiment was structurally asymmetric. I told him the only asymmetric thing in this room is his jawline after I see another AI thread promising retail investors 100x returns. Use AI for checklists. Use it to summarize filings. Use it to challenge a thesis. Use it to learn what ROIC means before you embarrass yourself at a steakhouse. But do not confuse a prompt with an edge. Do not confuse a formatted memo with due diligence. Do not confuse Claude said it has catalysts with this business will compound capital for 25 years. And for the love of my offshore trust, do not tell regular people they can find 100 baggers before Wall Street with free prompts. That is not alpha. That is a liability event wearing a Canva graphic. The bartender is managing my tab better than these threads manage risk. Chad says the prompts are democratizing access. No, Chad, they're democratizing drawdowns.